individually. We'll look at the name and classification of each pattern, the logical interpretation of each pattern, which is extremely important, the comparison and connection between different types of patterns, which is something that helps memorizing not only the name, but the logical interpretations as well, the advantages and disadvantages of using candlestick patterns as a trading technique, and some very important conclusions about the use of this technique in real trading. This is considered to be basic knowledge about trading, so this entire course is free. Let's begin by talking about the basic elements of candlestick patterns. A candlestick pattern has two elements that classify it: the complexity and the type. It's important to understand these elements and classifications because that will simplify things later. Let's take a look at each of these two elements individually to see what they mean. The complexity of a candlestick pattern refers to how many candlesticks compose the pattern. There are two levels of complexity. There are simple patterns and complex patterns. Let's see what these two classifications mean. A pattern can be simple, which is when the pattern is formed by only one candlestick. In other words, the shape of only one candlestick will give a signal about what the market is going to do next. A pattern can also be complex, which is when the pattern is formed by two or more candlesticks. In other words, a combination of two or more candle shapes will form a single pattern that will signal what the market is going to do next. All candlestick patterns we are going to study in this course can be categorized into these two levels of complexity. In other words, candlestick patterns can be simple, which is when the pattern is formed by one candlestick only, or they can be complex, which is when the pattern is formed by two or more candlesticks together. That sums up the first element of a candlestick pattern, which is its complexity. Let's take a look now at the second element, which is the type. There are three types of patterns: the reversal patterns, the continuation patterns, and the neutral patterns. Let's begin by taking an overall look at reversal patterns. Reversal patterns indicate that price will reverse its current direction, meaning that price will be going in one direction, and when the pattern appears, it will start going in the opposite direction immediately after. Reversal patterns can be bullish or bearish, so let's take a quick look at what that means. The terms bullish and bearish are part of the market jargon to indicate if something is going up or down. Just as a curiosity, when traders say bullish, they want to indicate upside because bulls throw their prey up when they attack. When traders say bearish, they want to indicate downside because bears throw their prey down when they attack. Let's examine the bullish reversal pattern first. In a bullish reversal pattern, it means that price will be going down, then a specific pattern will appear to signal a reversal to the upside. In other words, the bullish reversal pattern signals that price will go up immediately after the pattern. Conversely, in a bearish reversal pattern, it means that price will be going up, then a specific pattern will appear to signal a reversal to the downside. Some people get confused by this, but all you need to remember is that the term bullish or bearish indicates the direction price will go after the pattern. So a bullish reversal pattern signals that price will go up, and a bearish reversal pattern signals that price will go down. In summary, reversal patterns indicate that price will reverse its current direction, and they can be divided into bullish and bearish reversal patterns. Next, we are going to take a look at continuation patterns. Continuation patterns indicate that price will continue to go in its current direction. Like the name suggests, the continuation pattern states that price will continue its current trajectory instead of reversing it. Like reversal patterns, continuation patterns can be bullish or bearish. In a bullish continuation pattern, it means that price will be going up, and then a specific pattern will appear to signal that price will continue to go up instead of reversing to the downside. The term bullish indicates the direction price will go immediately after the pattern. In a bearish continuation pattern, it means that price will be going down, and then a specific pattern will appear to signal that price will continue to go down instead of reversing to the upside. Once again, the term bearish indicates the direction price will go immediately after the pattern. That covers the continuation patterns. In summary, The reversal patterns indicate price will change direction, and continuation patterns indicate that price will not change direction. Both reversal and continuation patterns can either be bullish or bearish. The third and last type of candlestick pattern is the neutral pattern. Neutral patterns indicate a momentary stop in price. Unlike reversal and continuation types, there is no such thing as bullish or bearish neutral patterns. In a neutral pattern, price can either be going up or down, and then a specific candlestick pattern will appear to signal that price stopped advancing in its current direction. For example, imagine that price was going up. If a neutral pattern appears, it will indicate that price has momentarily stopped going up, but it doesn't necessarily mean it will continue going up or reverse to the downside. In other words, the neutral pattern doesn't indicate the direction that price will go next. It just indicates that price has momentarily stopped advancing its current direction. That concludes the overview of the three types of candlestick patterns. In summary, reversal patterns indicate that price will change direction, and continuation patterns indicate that price will continue its current direction. Both reversal and continuation patterns can either be bullish or bearish. Neutral patterns don't indicate the future direction of price. They simply indicate a momentary stop. Since neutral patterns don't indicate the future direction of price, there is no such thing as bullish or bearish neutral patterns. That covers the two elements of a candlestick pattern. The combination of these two elements form the classification of candlestick patterns, which is very useful to organize the many patterns we want to memorize and understand. The way we use the classification is by saying the complexity first and then the specific type to classify the pattern. For example, a simple bullish reversal pattern. Just by looking at the classification, we know that the pattern is composed by only one candlestick since it's a simple pattern, and we also know that the pattern indicates a reversal to the upside since its type is bullish reversal. Another example could be a complex bearish continuation pattern. Again, just by looking at the classification, we know that the pattern is composed by two or more candlesticks, and that it indicates that price will continue to go down since it's a bearish continuation. A third example could be a simple neutral pattern. In this case, we know that the pattern has only one candle and that it indicates a momentary stop in price. The way we study various candlestick patterns is by saying their name and then saying their classification. For example, the hammer is a simple bullish reversal pattern. In this case, the name of the pattern is hammer, and just by looking at its classification, we know that it is composed by one candlestick only, and it indicates that price will go up immediately after the pattern appears. Another example could be the doji is a simple neutral pattern, so the name of the pattern is doji, and by looking at its classification, we know that it is composed by one candle only, and it indicates a momentary stop in the advancement of price. As I said before, this is useful to memorize and organize the patterns since there are many of them. Now that we understand the details of how we classify the various candlestick patterns, we can start studying the patterns individually to learn about their logical interpretations, which is the most important part. Before we move on, there is one last thing to remember. Names and classifications just help memorizing and organizing the patterns. The really important thing is to understand the logic behind each candlestick pattern. You will not benefit from learning all the patterns if you don't understand why they might work and the rationale behind each one. With that said, let's begin by taking a deeper look into the neutral candlestick patterns. There are only simple neutral candlestick patterns, meaning patterns formed by one candlestick alone. The neutral patterns are formed by the doji family, which is itself formed by 5 types of doji. The main characteristic of a doji is that the opening and closing values of a candlestick are equal to one another. In other words, dojis have no candle body. That's the key to understand why dojis are a neutral pattern. The fact that the open and close values are equal to one another implies that there was no clear winner in the internal battle of buyers and sellers of the candlestick. During the formation of the candle, buyers and sellers struggle to see who is going to dominate that candlestick in particular. If the candlestick closes higher than it opened, it generally means that